We have a very big week. A lot of economic data that is going to move the markets big, as well as Tesla stock. So I hope you are ready for this. I'm going to give you guys my opinions on what I'm watching for, what I think is the most important, how it can move the markets, as well as Tesla stock. On top of that, we're going to go over some breaking news that is coming out here on this Sunday that is quite exciting, including the Tesla robot Optimus. Well, we're making a lot of progress. Let's go ahead and get into all of this information. If you are an investor in Tesla stock, hit that like button so everyone that clicks on this video knows how many investors have watched it. I think that's a pretty cool concept. As well as hit that subscribe button if you want to stay up to date with all of these videos each and every single day. Hopefully help you make more money. Now, this is definitely the big story of the day today. Tesla shared a video to their Tesla Optimus X account, and they also write its neural network is trained fully end-to-end, video in, controls out. Come join to help develop Optimus and improve its yoga routine. Take a look at this video. It's impressive, the progress that Optimus is making. It's one of the best robots out there, and we just started developing it. So that was some serious progress. Now, there's a lot of open questions on what Optimus is really going to be used for. Is it going to be a novelty item that you kind of put in the corner of your room and it sits there? Is it something that's going to be able to do your housework for you or be your personal assistant? Or what degree of functionality is the Tesla robot going to have? These are open-ended questions that we just don't have answers to right now. That's the bottom line to it. So right now, I'm not expecting a whole lot as far as boosting Tesla's share price, but if you continue to see improvement to Optimus at this pace for 6, 12, 18 months, you might start to get Wall Street actually pricing in the Tesla robot to the same degree as we price in the robotaxi in the future. Once it looks a little bit more like reality, like it's actually coming and there will be a use case for it and there will be dollars to be made, then Wall Street will look at the products in a positive light. But right now, not expecting too much, but down the line, this could be huge for Tesla. Tesla Giga Berlin offers job placement program for veterans. First participants in the program will begin work in areas such as logistics, maintenance, and security. Tesla is the largest employer in Brandenburg, as it employs more than 11,000 people. The company welcomes people from a variety of backgrounds with and without experience and offers training opportunities. Giga Berlin also keeps its doors open to veterans. For several months now, the manufacturer has been offering members of the Bundeswehr in Germany vacancies at the factory after their service ends. Now the first retired soldiers under a new special program will begin working at Giga Berlin. A Tesla spokesperson said the first 20 participants will now begin working at Tesla, and I think this is pretty cool. You really got to take care of your veterans. A new Tesla vehicle is coming to the Auburn police fleet. It looks like the Auburn City Council approved the purchase of a Model Y for the Auburn Police Department. A lack of police vehicles available for purchase led the police department to transition to purchasing the Tesla sedan, according to the police department. Tesla now says 75 plus superchargers are opening by the end of the year in Las Vegas. Now, Tesla has not officially made a statement on this, but you are seeing this actually posted on billboards in Las Vegas. As I like to say all the time, the more chargers, the better. The number one reason why everyone doesn't buy EV vehicles, well, it's not because EVs have a lot less maintenance. Who doesn't like that? Who likes going to get an oil change or getting your brakes done every 20,000 miles or so? Who would not want an EV? Well, anyone that has range anxiety. So the more chargers, the better. And you probably need 5 to 10 times the amount of chargers we have out on the roads to get everyone convinced that they should buy an EV. I live in Michigan. It's not very easy to come across a Tesla supercharger or just any other charger. And the other chargers take a long time to charge, and they're very much a waste of time. So there's like one Tesla charger that I can use, and it's like 50 miles from me. I have to charge at home. So it is a big obstacle. So the more, the better. Now, I want to play this clip for you. It's about 3 minutes long, but it is hilarious. It's going over Gordon Johnson and what he said on September 23rd, 2020. Just completely and utterly false. And I think it draws a very important point that a lot of analysts, a lot of individuals are bearish on Tesla, or they're bearish on full self-driving. Dan O'Dowd is a great example of that. But Tesla continues to prove everyone wrong. In 2024, if you guys have not watched the last video I just put out, it's going to be a very good year.
You think there's a day of reckoning coming?
Right, but Joe, you got to be careful with just looking at stock price, right? If you look at their guidance, previously they said they were going to do over 500,000 cars. Last night, if you look at the midpoint, it was 495. So they actually cut their guidance last night. Listen, Tesla's revenues, as you know, peaked essentially in the fourth quarter of 18. So when you look at his, missed promises, and you look at the fact they're not investing, I think you have to be very skeptical with respect to his projections. And I think next year they go back into losses as that credit revenue falls. And while people compare Tesla to Amazon, it's not Amazon. Tesla's more like AOL or BlackBerry. There's 46 new EVs hitting the market next year, 8 of which are coming from VW. And if you look at what VW said with respect to 300 gigawatt hours per year of battery capacity, that works out to about 4 million EVs they're planning to push out over the next 2 to 3 years. So I think that what Musk did last night essentially was push out the production of his batteries. And I think the issue is all the big boys, Ford, GM, VW, they've essentially brought out battery capacity. There is no capacity left. And we think that given what he said last night, we think their deliveries are actually going to be down in 2021 because they just don't have the battery capacity to hit what they need to hit. And everybody else is sucking up all the capacity in the industry.
You're suggesting that next year for Tesla, they're going to have supply problems? That's the problem? Meaning there's going to be so much demand for this car and their problem is going to be supply?
No. I think the problem is demand and competition. I think Tesla's deliveries...
Well, no, but hold on. You just said... Just hear me out for a second, Gordon. Sure. You just said a moment ago, you said everybody else is sucking up the battery supply. They won't be able to have enough batteries. And so... if they don't have enough batteries, that's a supply problem. That's not a demand problem.
Right. No. What I meant by that is they're not going to be able to expand their capacity. Listen, the reality is they were roughly 70% utilized if you look at their 2Q shipments versus what they said their capacity is. So they're not even selling out their current capacity, despite the fact that they're ramping a 500,000 car per year facility in Germany and a multi-hundred thousand car facility in the U.S. There's not enough demand for their existing capacity. So the issue is not supply. They're not demand constrained or supply constrained. It's a demand problem, and it's competition next year that's really going to hurt them. The ID3, VW's ID3, which just launched in Netherlands, Norway, Spain last month, as of yesterday, has outsold the Model 3 in its first month. That's a big problem for Tesla.
I don't know if you guys caught it like I did, but look at the market cap on Tesla at the time, $377 billion. Today, the market cap on Tesla is over $800 billion. So you have seen over a 100% gain since then, right? Your market cap has more than doubled since Gordon Johnson made these statements. And as you know, he's been short on Tesla a lot in the past. If you just go long, you would have made so much money. And that's really just the start. Talk to me in 5 or 10 years. The gains are going to be ridiculous. As long as things go right for Tesla. Obviously, things can go wrong sometimes for even great companies. If next year we go into a recession, well, if it's a bad one, that could be negative for Tesla. Who knows? There's a lot of uncertainties. I'm not a financial advisor, but I think it's pretty simple. You just don't bet against Tesla. And you sure as hell don't go on CNBC to publicly spread, I guess, lies or unfactual due diligence. That's never going to end well for you or your reputation. Let's now go ahead and break down the economic calendar for this week. Now, just to briefly state what's going on in the markets, we've talked about this many times now in multiple videos. We've been discussing this for weeks here on the channel, way before the market started to sell off. So if you guys have been following this channel every day, you've known this was coming, or at least I've made it very obvious. I thought a downturn for the markets were coming, and sure enough, it's happening. Why it's happening is the Fed is delusional. They are saying they need to raise rates even more, although we're going into recession and inflation is coming down. Sure, it's slower maybe than what they would like, but it's coming down. Now, the markets have come to the realization that the Fed is asleep at the wheel, and they are going to force us into a recession. The markets since May, and really NVIDIA's earnings, have priced out a recession of this market. You were pricing in a recession of this market back during the crash in 2022, especially towards September, October, November of 2022, even December for that part. You were pricing in a recession. There was not a lot of risk, relatively speaking, to buy stocks when the markets were back at the end of 2022. Well, now you rallied. People priced in the soft landing, the no recession, a competent Fed. The Fed just showed they are very incompetent. We're going to see a recession. Question is, how deep, when, and how long does a recession last? Those are question marks right now. Are we going into a recession like right now? Is this going to be a first half, second half of 2024 thing? Are we going to see a rollover of credit? Are defaults going to explode? Are corporate bankruptcies going to be a big problem? These are just questions we don't have answers to. So that's very important to this next segue. Any economic data that we get that suggests a recession is coming or happening, or any form of timing that we can get on that, is going to affect the markets big time. So on Monday, we are going to get the Dallas Fed Manufacturing Index. This will come out at 10:30 a.m. I don't know if this will give the markets a big move. You've been negative for a very long time here. You're expecting negative 10. Obviously, if you come in way worse than -10, you will see a market movement, market reaction, but don't bet on that, okay? It's not a huge data point that is coming out. Now, for Tuesday, we are going to get the S&P Case-Shiller home price month over month and year over year. That comes out at 9 a.m. in the morning. You also get new home sales month over month and year over year as well. You also get the Richmond Fed Manufacturing Shipments Index. You're expecting around -5. Same story here. It's been negative for a while, so you really need to see a big negative number to get the markets to react big to these data points. They're just not that important because we have been negative for a long time. It hasn't been good. Now, Dallas Fed Services revenue, that could be a little bit more important since we really haven't went negative besides in December of 2022. So you want to watch that one for sure. That data comes out at 10:30 in the morning on Tuesday. That's basically it. You are going to get Fed Bowman that speaks at 1:30 p.m. And Fed speakers are also going to be important. If Fed speakers take the message the market has been sending and they start to be a little bit more constructive and say, hey, maybe we should pause and not raise rates, or even not even consider raising rates. Maybe we should actually think about rate cuts a lot sooner. If the Fed changes their tone, which I don't expect will happen, but if they do, it's possible, then that would obviously be good for the markets. That would show a little bit of competency with the Fed. That would show maybe we don't head into a deep recession. Even if we go into one, maybe it won't be that deep because the Fed will cut rates quicker. Don't count on that. The Fed wants a recession. That's the bottom line to it. And I think the markets have fully realized that at this point. At least we're starting to fully realize that with some of the drops that we have seen in the markets the last couple of trading days. Now, on Wednesday, you're going to get your first round of major important economic data. That is durable goods orders month over month. And you're actually expecting a pretty brutal number. You're expecting -1.4%. Now, last month's number was -5.2%. So it really makes you wonder how the markets are currently pricing in about 3% GDP when the durable goods orders last month came in -5.2%. Beyond me. But you're expecting a -1.4% print. If that comes in worse, well, you're going to be in for quite the problem. You're also going to get durable goods orders excluding transportation, durable goods orders excluding defense. And these are month-over-month numbers, and then non-defense goods orders. And that has actually been positive. Last month, positive 0.1%. You're expecting positive 0.2%. Now, that's basically it for Wednesday. You are going to get some numbers out of the UK, like car production year over year. A lot of data out of Russia, but these things don't tend to move our markets basically at all. China, Japan, Europe to a lesser extent, those are regions and countries that do affect our markets. And there's going to be quite a bit of global data coming out this week, but I'm not convinced any of it is going to have a big impact on the markets. Maybe the German inflation rate that comes out Thursday morning at 8 a.m. Eastern Standard Time, that could be a little bit more important since they are, the largest economy in Europe. Could be important. We'll have to see. Now, Thursday at 8:30 in the morning, you're going to get the GDP growth rate quarter over quarter. The final numbers for Q2, you're expecting 2.2%. The last revision we got was 2%. So you're actually expecting an upward revision to Q2 GDP. If Q2 GDP gets revised, let's say it comes in at 1%. That would be a problem for the markets, and that would not be great. Now, at 8:30 in the morning as well, you're going to get initial jobless claims. This will actually start to be very important because initial jobless claims is a lot different than your non-farm payroll report and some of your lag data. This is on a weekly basis. You get initial jobless claims every single week of any given year. So if we're going to go into a recession, if we're going to see the unemployment rate spike, then odds are you get the initial jobless claims that is going to spike first. You're expecting a small spike to about 217,000, but you're still coming off of, way higher levels. So this would be still a really good initial jobless claims report if you come in at 270,000. If you start to come in like 250, 300, that's where you start to get more fears of that recession. Now, on top of that, you're going to get the final estimates for Q2 on GDP sales, real consumer spending, core PCE prices, corporate profits, continued jobless claims, as well as looks like jobless claims, the 4-week average, which is right around 215,000. So you're not really seeing a spike here yet. If we do see that, that would obviously be a problem. Now, you are going to get at 10 o'clock in the morning, pending home sales month over month, pending home sales year over year, as well as the Kansas Fed Manufacturing Index. That actually comes out at 11 a.m. This does tend to be a little bit more important to the markets. Obviously, you have to wait and see what happens. But the Kansas Fed data does tend to move the markets a little bit more. You're also going to get the Kansas Fed Composite Index. This has recently really started to fall quite a bit. You're expecting -1 here. You are going to get Fed Cook that speaks at 1 p.m., a 7-year bond auction, and then a speech from Fed Jerome Powell on Thursday at 4 p.m. Eastern Standard Time. So right after the closing bell. And we'll see, because there has been quite a bit of backlash to the Fed. A lot of people are starting to say what we have been saying here on the channel for a while. The Fed is asleep at the wheel. They're looking at backwards data. They're pushing us into recession. I think it would be pretty hard at this point for the Fed to not realize what they're doing. So does Fed Chair Powell try to walk back some of the damage that they did at the last Fed meeting, or do they reiterate higher for longer? We need to see a slowdown in the economy. Do they reiterate some of the same things we heard last week? That's a big question. But that will be on Thursday, a major event. And then on Friday, you're going to get the inflation rate year over year for France. You're going to get GDP numbers coming out of the UK as well. GDP numbers may be important, but again, it's not something I expect that will give the markets a big reaction. Now, the Eurozone inflation rate year over year and inflation rate month over month, that comes out at 5 a.m. Eastern Standard Time on Friday. That could be a little bit more important. But the big data of this week comes on Friday. Besides durable goods orders on Wednesday, you're going to get personal spending month over month for the month of August. This is expected to come in at 0.5%. So very healthy personal spending numbers are expected at least to have occurred in the month of August. That data comes out at 8:30 in the morning. And then you get personal income month over month for August. You're expecting a big jump here to 0.4%. Prior reading was 0.2%. And I should point out personal spending month over month for the month of July came out at 0.8%. And you're expecting, again, 0.5%. So a slight decline here, but just really high numbers overall. And that's where a lot of your GDP estimates are at 3%, because you've seen really good spending so far for July. We'll see if that holds up through August. Personally, I don't think it will, but how government data works is you actually get the data report, and then you get 3 revisions. So just the numbers you see initially will end up looking a lot different 3 months down the line. Sometimes you end up getting a positive report. You tend to get something that is really good, and then it just gets revised lower and lower and lower and lower for 3 months in a row. And then you're looking at data that is really not good, but the market's already reacted to it weeks ago, months ago, because the revisions. That's where if even if we go into a recession, if we get revised down into a recession, you might not even know it for months after the fact. So that's something you guys got to keep in mind as well. And the markets will start to realize this, like, hey, if GDP comes in really low, and maybe not negative, the markets might say, hey, what are those revisions going to do? Are those revisions going to take us into a recession? So that is something to also keep your eyes on. We are also going to get core PCE price index month over month and PCE price index year over year. Now, personally, I don't think this even matters at this point. Let me tell you why. The markets are not selling off because rates are going to be higher for longer. That's not it, guys. Don't fall for that. The markets are selling off because we're heading into a Fed-induced recession. The Fed will not stop until we go into recession. So I don't think it really matters if inflation comes down at this point. Sure, that's better than inflation rising. But if inflation comes down, it's not going to stop the Fed. So does it really matter in the grand scope of things? I would argue probably not. Sure, you might get that initial bullish reaction if inflation does continue to fall. But is that what is going to get the Fed to stop raising rates as the markets were hoping for? Probably not. So, my opinion. Let me know what you guys think about that down below in the comment section. Do the inflation reports even matter now? I don't think so. I think the Fed made it very clear. You need to see pain in the economy or they will not cut rates. They will not stop holding rates at where they are, essentially. So yeah, let me know what you guys think down below in the comment section. We are also going to get Fed Williams that speaks at 12:45 a.m. on Friday. Now, as far as Tesla stock, like I have said many times, I do think there is more downside in the broader markets. I think the S&P and the NASDAQ have quite a ways to fall before you fully price in a recession is coming again for our markets. Back here in September, October, you were not in a recession, but the markets had fully priced in a recession. So where do you have to go to maybe halfway price in a recession? Is it 400 on the S&P? Is it 410? Is it 390? Is it 380? I don't know. But I know it's higher than 430. I know the multiple is way too high here at about 19 times next year's earnings if the markets think we're going into recession. Okay, that's the bottom line to it. You're going to probably 50% price in a recession. Before it happens right now, that's what you're seeing. I don't think you have 50%, roughly, priced in a recession so far. So I do think that means more downside, but we have fallen quite aggressively recently. It would not surprise me to get to some degree a bounce or sideways trading. Now, kind of bad news for any of the bulls out there. The level you really wanted to close above on the S&P 500 was 431.34, and you did not do that. You sold off after really finding that as a level of support for most of the day on Friday. You sold off towards the end of the day, closed at the lowest point of the trading day. That did not look good. Something else to also consider is this upcoming week is the last week for most hedge funds and institutions 2023 calendar year. So what tends to happen and why next week usually is the worst week for stocks, period. Yeah, believe that or not, this is the worst week for stocks in any given year. That's because you see a lot of selling, booking of profits for your fiscal year, which right now is 2023. You start your fiscal year 2024 on October 1st. You get a lot of booking of profits, and you also get investors saying, hey, what's 2024 going to look like? Should we put on some hedges now to get ready for 2024? And I think a lot of people are probably going to do that, and that could cause further downside for our markets. Pretty straightforward. But Tesla specifically, I'm very bullish on, especially for 2024. You really don't want to bet against Tesla heading into 2024. But do I think you can get cheaper shares over the next couple of weeks, next month or two? Sure, Tesla stock could come down, or we could trade sideways. That's as well a very real possibility. Let me know what you think is in store for Tesla stock and the broader markets in this upcoming trading week. Hit the like button and subscribe to the channel if you made it to the end of this video. If you guys want to take it a step further and come trade with me live in real time, link down below in the description of this video as well. I post all of my trades, all the hedges, protecting the portfolios, going long, playing earnings, doing a bunch of stuff over there. It's a great time. Come join us. Link down below in the description of this video. You guys have a great rest of your day, and I will see you in the next one.